So this video is going to be a price action technical analysis for the week ahead. Today is October 1st, so it's going to be for this week, the first week of October. This is going to be for the weekly chart. Just a brief overview of technical analysis for the week. So here's a weekly chart over here. Let's see what's going to find interesting. Okay, the first thing I saw was this. Let's see. Okay, the first thing I saw was this regression channel that I put up from you, as you guys know, from the weeks before. It's from this point and this point. You know, I mentioned these points so you guys could also place them on your chart and see how they come out on your chart. They should be the same exact thing, but you know, for you guys to get a good idea of what points I use. You know, I like to bring it up and point it out. So as this regression trend channel, clearly you have this market has been reacting. There's some correlation to this regression trend channel and price action, and with the most recent bar over here, we're about to meet some resistance on this upper level. This upper level of this, the midway line of this regression trend channel over here. So obviously this is the SPX, this is the cash index, and the markets are trading right now at 739, but that's the futures, and this is the cash index, so there's no trades going on right now, obviously, for the cash index, but it's not regular market hours. But we should open around, I don't think there's going to be a big gap up or down for the next day. I don't really think there's any kind of volatility. I didn't see anything, so you should expect it to open around this area. So we're pretty close to this midway regression trend line over here. This is the halfway part to the 50% level, and if prices do go around this area, it's going to be interesting how prices behave around this midway level of this regression trend channel. I definitely going to think it's behave more like resistance, and if it does break above it, I don't know how long it's going to be able to go up in this up pattern, but the markets are crashing up, so I wouldn't be so surprised. But definitely seeing this more as a resistance line. Let's see what else we have. We have the moving average, obviously sloping up, as you see here. This is the the 20-week moving average over here. It's the simple moving average, and here's the 50 simple week moving average, also sloping up. No surprise there. Nothing has changed. There's trend line. This trend line was just showing us how steep prices could get and how long prices cannot sustain this steep level, as you clearly see over here. They eventually do have to go lower a bit, and then retrace back up like they did. Trend line, horizontal line. So I think I mentioned this before the previous week. As long as prices are above this 2440 level, I'm going to stay bullish to neutral, and anything below this level over here of this 2380 level, definitely will start looking to be more bearish. But as prices stay above this line of 2440, definitely staying bullish to neutral. Those are far away, we don't have to worry about those. And obviously this is the weekly pivot over here. And is there going to be a new pivot? I think there is. Let's take a look. Yeah, it looks like there's some new pivots here. So I guess I'll use this one for this video over here. I'll use the emini futures, since the market's already open and trading. So we're clearly above this pivot level of 2493. This is positive. This is where the bulls are in control, that means. And if markets do start rising, we see the next level being at 2540. So a good area to keep in mind over here, this 2540 area on this weekly chart. And remember, guys, this is a monthly pivot. Let's go back on the SPX and let's see. Let's go. And this Bollinger Band, as I mentioned the previous week, markets are currently, did close above the Bollinger Band. The upper Bollinger Band was 2517, and I believe the market's closed at 2519. which means that there is strength in the market. There's a lot of strength in the market, and this is pretty bullish sign over here. But let's see, because from experience, eventually these Bollinger Bands behave like resistance, and markets and prices have to go back into these Bollinger Bands eventually with time. This is trend line for the weekend. This is the trend line obviously I use for my call vertical credit spread trade that I did. It's right at the line, and it's going to be interesting how this week is going to behave. I just feel that this trend line is definitely going to behave like resistance going forward, but you never know. It could break through it. If prices do break through it this week and well above it, it could be very, very bullish. But I don't know how long the market could sustain this steep level of trading. It's beyond me. I've never seen anything like this before, but that's the markets for you. Always trying to outfake the majority of traders and try to get outside the norm. So that's what the markets do best. Trend line and this Fibonacci levels, and these are Fibonacci extension levels that I created from this congestion line from, what is this, 2320 level around 2400 level. And clearly this measured move of about 1, that means that the distance from here to here is also the same distance from here to here, and we're well above it. Markets try to go below it, behave like support, and went past it. And one more interesting thing I found about this level over here is it's kind of interesting how from this point and this point, this measured move is equal to this measured move. Let's see. It's over here. Yeah, it's very interesting how this measured move from this point to this point is almost identical to this measured move. You see, the markets are always moving with respect to what they did in the past. So my next level that I'm definitely looking at, if the markets do go higher, where I might find some kind of resistance, is at 25.42, and the 1% market move, measured move, would be at 25.74. So that's the weekly overview of the weekly chart.